Hello, everyone. Welcome to XM Live, the advanced room here on XM.com. I'm Rafi Boyajan, the market analysis team. And joining me today is, of course, our own Stanley Kolev. This is the Analyst versus Trader session, which is basically a dedicated session where we try to combine some good old technical analysis with some fundamentals analysis, which some of you may find a little bit tricky to get your heads around, because I know that most of you do enjoy the technical side of things a lot more than fundamentals, which can be confusing, especially when we have someone like President Trump stirring things up all the time and ruining everybody's predictions. Before we get started, Stanley, how are you doing this week? How's your week been? What are kind of like your latest takeaways from everything that's happened this week?
Hi, Rafi. Very good to see you. Brilliant intro, gotta say. It's been a great trading week. Actually, the whole month, I could close everything and call it a good month. I had two very good waves on the Japanese yen taken. So we got some we discussed it multiple times before with you that the expectation for yen strength. It played with me absolutely brilliant, and I got multiple trades with the actually managed to catch with the weakest currencies where we got the Swissy, we got the Euro Yen as well. Um, and I have a brilliant month so far. Um, I really have to put a lot of effort for me to jeopardize it, so I hope I don't really do that. Other than this, everything is great. The weather is getting a little better. It's like -5, -10 in the mornings, but in the next days will be better. Have been waiting for this session. There is a lot going on, a lot to talk about with you. So, how you have been doing before we get to the charts?
Yeah, well, I've been doing pretty well. It's quite cold here, actually. It's one of the coldest. It's the coldest it's been here in like for the past 2, 3 years. Last year was, we didn't really feel the winter. It was kind of like spring all the way. This year, though, it's quite different. So it's a bit of getting used to. In the market-wise, of course, we've had a lot of ups and downs without any clear trends. So I'm actually looking forward to discussing some of these moves with you because, of course, you provide, for someone who's focused on fundamentals, I'm always interested to hear your insight on things. And we can see here in the biggest movers this week. You mentioned the yen earlier, and indeed, we've got there the top performing major currency. Bitcoin, okay, it's up there second on the table, but I wouldn't really put much into that. I think it's mostly because it's been it was underperforming in the prior weeks. Oil kind of benefiting
Yeah.
today.
Also for Bitcoin, 1% is that really a performance? I mean, that's kind of really
Exactly.
not much going on there. So
Yeah,
yeah.
exactly. And it's volatile currency, so if you want to call it the currency, so not to put too much into that. Oil, we might have mentioned that a little bit later on, but it's more kind of predictable kind of news that's boosting oil. Aussie Kiwi doing rather well, the pound doing well. We had a lot of UK data this week. We had RBA decision as well. And then, of course, gold doesn't look like it's been doing too well, but it is up there near its record highs. So that's definitely worth a discussion. And then look at all the way at the bottom dollar index, though the dollar not having a good week. But yeah, I mean, that's one of those risky bets, I would say, at the moment, those getting a little bit too bearish on the dollar, because, of course, we're in one of those situations where, the markets seem very confident about the reasons why the dollar should be going down. I'm not so sure about those reasons. That's going to be, again, one of those main talking points of this session. So I'm hoping that our viewers are going to stay tuned. If you guys have any questions, of course, you can enter them in the chat box next to your screens. But yeah, so what do you want to get started with, Stanley? I don't know what's kind of top of your agenda right now.
You mentioned something in the beginning of the session, um, about the fundamentals analysis that most traders don't really like it and don't pay attention to them and try really to avoid that. I have been one of those people before 2019, 2020. I was not much into that. Um, I have been very clearly we didn't have as much volatility back then. So, you get in a position to take profit, you reverse it, you take profit, and more or less we didn't have so rapid trends on absolutely everything. And when 2020 kicks, I have been getting in entries, but I have been leaving money on the table because I have not been staying in a position that was not fully priced in, or we got the um, fundamentals still supporting the same direction without a clear reversal. So I was like, okay, maybe I gotta change something. Then one of the trading experts here, I got very much influenced by him as well. Gil Pass is pretty much into macro fundamentals. Um, I was listening to him and I was like, all right, I mean, this guy knows a lot. I'm having session with him. I will learn on the meantime. Let's see if this is something that I could actually use and monetize. In the beginning, it was not so easy because you think that something is going to go in further direction, but you say, oh, maybe I was not really realizing that maybe it's fully priced in. Then it comes the pricing moment from the whole fundamental perspective and start to realize that something that you might still get data that's supporting this scenario, but it's already in the price, right? So this data is becoming either irrelevant or you either buy the rumor, sell the news. So you try to reverse this. So for all of the people that are not using fundamental analysis, I say for uh, beginning, start trying to understand them, not necessarily start to trade. Maybe start to trade some small or a demo account to trade just a combination of technical, but to have a fundamental edge and direction from the fundamentals. Or something even better that I'm using, even up until now. Um, I use the fundamental analysis to increase or decrease the risk. Let's say I have a beautiful distribution phase and I have an upthrust, very clear Wyckoff setup, without upthrust after a distribution, then I ask myself, if the fundamentals is with me, if yes, then I go bigger risk. If the fundamentals is against me, I still trade that setup because that's a beautiful configuration. I don't want to miss money on it. And maybe I'm even before the fundamentals start triggering, I still trade that, but I'm just not as exposed as I would be if the macro fundamentals or geopolitical or sentiment is in my direction. So I think that it's this have been a huge benefit to me to use it exactly this way, and it have been absolute game changer because back then I was limiting myself to 2% risk per trade, and I don't do this anymore. When I have a setup that I have to go 5%, sometimes even higher, I don't hold back and I go it. No matter it's a loss, I say, okay, I swallow that, but I see all so much of evidence. Let's say I have a very good reversal configuration. We're started the trend. We got the sentiment slowly shifting into this direction. Everything is priced in the market. Stop reacting on good news or bad news anymore. It depends whether it's up on that side. And I start seeing a little bit of a fundamental or geopolitical whatever evidence that things are going to shift. This is the time that I am executing big risk, and uh, this is time that with Japanese yen, more or less, right now to give an adequate example there, I have been buying Japanese yen from the November. I had a good wave down, but afterwards, at the beginning of this year, I have been way heavier in, and we already started seeing Japan data showing up higher, and Bank of Japan giving us not really forward guidance, but hints that well, maybe we are going to do it, yeah. And also you see an instrument that is at the end of the cycle. Maybe bonds are at the end of the cycle. The yields are at the end of the cycle, and we're gonna see bonds getting bought. So more or less, that's the perspective with the whole combination. And probably if it was not the fundamental analysis and sentiment, I put it in the whole thing. Um, if it was not, I would still make money on the Japanese yen, but I wouldn't made as much. Yeah.
Yeah, and yeah, it's interesting to hear your approach to this, and I would kind of agree with you what you said at the start that those of you that aren't too familiar with fundamentals, it's best to continue trading with technicals until you're more comfortable, more confident, because technicals, I think, they will give you safer signals than if you're sort of at the early stage of understanding fundamentals analysis. But then as Stanley was saying there, it will make you more confident on certain trades once you get the bigger picture. So definitely, I think that was some valuable insight there. And you mentioned yields there, Stanley, and yeah, you're right. We do seem to be peaking, at least in this latest cycle, even though we keep getting this sort of hawkish tilt from the Fed. Yields really peaked earlier in January. Okay, maybe it's not a clear signal yet that we're on a steep downtrend, but nevertheless, as things stand, it looks like unlikely that we're going to surpass that January peak around 4.80%. And this is one of the reasons why although there's still some uncertainty about the Bank of Japan, I think those two pairs, the dollar and yen, definitely, I think it's probably now in a trend reversal. I don't know if you want to take over, Stanley, now to kind of discuss a little bit more technicals with
Yes. Yes. Yes.
any tips that you have. And it's been a bit of a strange week for the Bank of Japan because
I share. Yes.
yeah, so you can go ahead and share, and I'll kind of introduce what's been happening with the BOJ this week, because we did get some hawkish remarks at the start of the week, kind of giving us that further hints of, we're going to raise rates again. But in the last 24 hours, we got comments from both Ueda, BOJ governor, and the Prime Minister of Japan, raising some concerns about high yields in Japan, which would make it difficult for the government to continue borrowing at such high levels. So this suggests that policymakers are kind of mindful about not letting Japanese yields get too high, which would make things pretty difficult in terms of borrowing costs. And so we've seen the yen pull back today. But yeah, this is probably just a short-term thing. What I find curious is why markets are still pricing in just one rate hike this year. I'm kind of going for 2 rate hikes. The first one being maybe May, June time, and then next one possibly in October. But yeah, this is kind of like one of the more hawkish scenarios. The markets are kind of saying, and economists as well, they seem to be going for 1 rate hike in July, and that's it. I don't know, what are your thoughts on this, Stanley? Do you think we're going to get continue to see more hawkishness from the BOJ, or do you think the markets are being a little bit
No, I'm with
dovish?
you. I think that we're going to see it. I think that the market just doesn't want to get too ahead of itself by pricing this in, because at the end of the day, Japanese, you know, Bank of Japan wants to see yen devaluating, just not want to see it with very severe devaluating pace that we got it before. We got it in 2020 with Fed start increasing interest rates. They still want to devaluate the currency, but not with the strong pace that we got. So I think that we're going to get more than one hike from Bank of Japan, and I think that even though this have been some home run for me, the whole buying yen thing, I think that we're in very early stage. So of course we'll be getting those pullback, etc. But imagine what will it be when um, Federal Reserve start cutting interest rates. So for us to really see the divergence that we want to see, to have some, to have some deep pullback, will be 1%, and then continue the downtrend. Um, I'm with you. I support this idea that they're going to hike furthermore. Also, the data suggests so. I think that the market participants are not too, you know, to price something in,